when you buy the company based on only valuations and the fundamental keeps deteriorating, then it doesn't matter whether you bought the company at the cheap prices or expensive prices, you're going to make losses.
हेलो एंड वेलकम टू पैसा बोलता है। मैं हूं आपकी होस्ट मृदांजलि रावल। आज इस एपिसोड में हम बात करेंगे मल्टी बैगर स्टॉक्स की। हमारे साथ आज हैं स्टॉक मार्केट एक्सपर्ट निखिल गांगिल। हाय निखिल, हाउ आर यू डूइंग टुडे?
आई एम ग्रेट.
Stocks in a country like India are considered taboo, right? So how did an IITian like you find yourself drawn to the stock market?
So I would like to differ on the taboo part here. It's not taboo, it's more of a convenience based word that people use. I have seen a lot of people who say that market is satta bazaar or jua and all that, and they come, and when the market is at bull cycle, they come to us and they ask for advice. So it's definitely not a taboo, it's a perception that people have created. And also there are basically, you can see there are two Indias, and you can see that in any sector, not just in stock market, in fashion, in market, in business, in jobs. And what the 1% of India is doing, the 99% of India does it after, let's say, 5 years or 10 years. So we have to look at the big opportunity. If you want to do something bigger, you have to be in that 1%. So it's not about being IIT, and you don't need IQ more than 100, 120 to see the big opportunity that India is going to have in next 20, 30 years. So it's a billion dollar opportunity, and I think we are going in the right direction.
Okay, that sounds lovely. So what are the biggest challenges you faced in the early days of serious investing and trading?
So as you know that I am from engineering background. I did my civil engineering from Indore, IIT DAVV, and then I did my M.tech from IIT MADRAS in offshore structural engineering. So I didn't have a background of MBA, CA, CFA people have. I also didn't have seniors who can guide me in the stock market. So I had to do it all alone for the first 5 to 7 years. So I think that was the biggest challenge. Fortunately, one of my senior, he was in market for 10-15 years, and after having a lot of loss in the market, I went to him and he gave me those books which I could read and understood about the market. So that was the biggest challenge. One more bigger challenge was, as you said, it is considered taboo. I come from a very small town in India, Gohad in Madhya Pradesh. People say, as you said, it's taboo, it's satta and all that. So I had to convince first myself that I want to do this, and since I want to do this, I have to do it the right way. And then I had to do a lot of convincing to others also, like my family and all, before going into business. So I think that was the biggest challenge.
Okay. The stock market universe is huge, and spotting a good stock is very hard. So in simple terms, if you can explain the process you follow to spot multi-baggers.
See, if you look at the market participants, they always say ki buy low, sell high. But how low is low?
Right.
How high is high? So basically nobody tells you that. You have to figure those things out by yourself. And so our process is that we figured out, it took me 2-3 years to figure out only that how low is actually low.
Right.
So we gave it a name, the minimum intrinsic value and maximum intrinsic value. So minimum intrinsic value, in the simple terms, if I have to tell you, it's the minimum possible value of the company according to its fundamentals. Cash, reserves, profits, sales, according to them, the minimum possible value of a stock is called minimum intrinsic value, and the maximum possible value is maximum intrinsic value. So we like to buy it at minimum intrinsic value and exit at maximum intrinsic value. That's our in-house formula. And how we like to pick stocks, it would be little technical. There are things that we follow. One is that we look for the companies where the promoter or the owner of the company itself is buying the company, more of his own stocks. And second is when the company has a lot of cash. So we use this ratio called cash divided by market cap. If that is more than 0.5, 0.7, we like to look at those companies. If there is a lot of capex happening in the company, then we also like to look at those companies. And fourth is we have a screener basically that we have made for ourselves, where we rank the companies based on sales growth, ROCE and P by B ratios. So in this, what we do is we look at the sectors which are undervalued, where the sector wise there is a negative perception in the people, and we rank those companies based on these three parameters, and top 3, top 5 companies we like to analyze further. So basically out of these 4 trigger, we get let's say 80, 100 companies every quarter.
Okay.
And then we go in detail and do the analysis and valuation analysis, fundamental analysis, and try to find out 10, 15 companies which are worth investing.
So we have heard you say, value investor, one should not underestimate growth. As a growth investor, one should not underestimate value. Can you please elaborate this for our listeners?
When I started, as I said to you, from the day one I was a value investor. But what I used to think was that companies which are available at very cheap valuations, that's the work of a value investor to find those companies only. And I used to buy companies based on only their P by E ratios, P by B ratios. So these are the valuation parameters basically. They only tell you whether the company is cheap or not.
Okay.
But when you buy the company based on only valuations, and the fundamental keeps deteriorating, then it doesn't matter whether you bought the company at the cheap prices or expensive prices, you are going to make losses. So basically the company can be undervalued for 3 reasons. A, the sector itself is not performing and people have negative perception about sector itself. B, business is not performing because of management incompetency or some supply demand issues. C, people have wrong perception about the company. Everything is great in the company, but people have wrong perception, people in stock market. And fourth, there is something wrong with the business itself. For first 3 condition, you have to do value investing. For fourth condition, you should not do value investing. If there's something wrong with the business itself, you should not look at the valuation itself. So first 3 conditions are favorable and the last condition is not. So that is why you have to, as a value investor, you should never underestimate growth. And the opposite happens with growth investors. So the growth investors, they buy on the basis of what guidance company's management is giving, but they don't look at the valuation. And when those guidance do not come true, they suffer a lot of loss in the company. So this is why I say that as a value investor, you should not underestimate growth. As a growth investor, you should not underestimate value.
Okay, awesome. If our listeners want to recreate your success story in the market, what would you advise them to do in their journeys?
So first of all, you have to look at your interest. If you are really interested in looking at the business fundamentals, you are welcome here. Keep learning, keep investing. And third thing is, जैसे हम gym जाते हैं ना, so people say कि first 6 months have a trainer.
Yeah.
So in stock market also, first 3 years have an advisor, have an mentor, some kind of thing, and then you learn. And if you can do on your own after 3 years, do it. Otherwise, see, these 3 years will save you 10 years of doing alone that we had to do. Right. So those 10 years will be saved from these 3 years. So after doing 10 years, we lost a lot of capital. Yeah. And we lost 10 years. So you don't have to do that. You will not lose capital, you will not lose 10 years. In 3 years, you can cover all that, and I think you can have a good journey after that.
So like how Nikhil gave a brilliant example of trainer, Stockgrow will act like your trainer. So download app now. We'll move to the next most interesting segment. It's called rapid fire. Okay. So this I've already asked one question, so I'll just change it to one interesting question. Okay. So let's start. Name 3 stock market influencers you admire.
So you can look for Howard Marks. He talks about cyclical investing. And you can look for Peter Lynch and Joel Greenblatt. They are also good value investors.
Okay, awesome. Name the most important trait required for stock market success.
One trait is courage. I mean, you have to invest when nobody is investing. I've seen a lot of people, they are not willing to invest when the market is going down. And then they say, अरे यार, next opportunity कब आएगी? जब market already performs. So, and I've seen this happening again and again. So, the first trait is courage, and second courage is patience.
Okay, awesome. Last question, if you would like to answer.
Yeah.
What's the, like in a year, what's the maximum profit you have ever made?
Maximum profit in terms of multi-bagger?
Yeah.
One time I made 68x.
68 times?
Yes.
Oh, wow.
But the allocation was very low. And recently I made 16x, 1/6 in a penny cap. And apart from that, from our strategy, we have made 6x and 6x, 5x in 5 to 7 companies.
Okay, awesome. So I'm assuming these will be like big capital, like a huge capital amount on which you are saying 6x and 16x.
Yes, 2-3% allocation of the basically portfolio.
Thank you so much, Nikhil, for joining us today. My friends, there is no shortcut to success. Long-term investment it is. We'll be back with many more episodes of Paisa Bolta Hai. Till then, stay tuned.